Hashtag awkward. Twitter shares plunged 20% after its earnings were released ahead of schedule. Let's check in with Mike.
Yeah, indeed, Kevin. This is the second time in the past 4 months that Twitter has actually had a data leak, and it's raising some questions about the company's corporate structure, credibility, and keeping client information private if it can't keep its earnings secret until they're supposed to come out, which was supposed to happen after the close of trade last night instead of about 3 o'clock yesterday afternoon. Well, there's lots of questions about this company going forward, and also its earnings performance wasn't all that good. Lost $148 million or thereabouts. Its revenue generation was 20% below forecast. So the advertising dollars aren't as much as they were expected to be. Stock was down as much as 28% at one point yesterday afternoon, just before the close of trade. And this morning down a little bit again to $42 and change. It seems sort of as the third player in social networks. You got Facebook, LinkedIn, then Twitter. We'll track that stock, heavily traded in pre-market trade this morning. It is not a bubble. This is the word from our Bank of Canada Governor Stephen Poloz, who was giving his first of 2 days of testimony up in Ottawa yesterday regarding the health of the economy, and basically was questioned about the idea that in Toronto and Vancouver you've got record housing prices, and is this something we should be worried about? Well, Poloz says, look, supply and demand is pretty much balanced. In fact, there's too much demand, not enough supply. It's not an overbuilt situation. Canadian debt loads continue to climb. Interest rates, though, are record lows, so very much a balanced environment, according to our central banker. Canadian dollar, interestingly, yesterday was above that 83-cent U.S. threshold for the first time in several months. So that dollar's been climbing here. U.S. dollar's been weakening. Coming up today, big day coming up for U.S. economic guidance. We'll have the GDP report coming up at 8:30, and then this afternoon a decision on U.S. interest rates at 2 o'clock. Not going to change interest rate policy this go round. They'll push that back probably to September or thereabouts. And at least it's a start. General Motors confirming yesterday it is adding 100 engineers to its Oshawa R&D facility. And the company talking that, look, they wouldn't be making this investment if they weren't committed to Canada, so this actually bodes pretty well for future production, although at the Oshawa plant, although nothing confirmed regarding what new vehicle will be going in there. That probably won't happen until 2016 at the earliest. But nevertheless, a positive signal from the company with that announcement yesterday. Kevin, back to you.